Today, gold just shattered its own record high, trading above US dollar 3,750 per ounce. If you hold gold, plan to buy gold, or even follow markets, this is a moment you do not want to miss. In this video, we'll break down why gold surged today, what the experts are saying, and what could happen next. Whether you're a trader, an investor, or just curious, stick around. If you're new here, subscribe for market updates, commodity forecasts, and macroeconomic analysis. Let's get started. Latest price moves. As of this morning, spot gold hit a new all-time high, about US dollar 3759.02 per ounce, and it's trading near US dollar 3750 to 3760. December gold futures similarly moved up. We saw them around $3,787.40 per ounce. These gains come amid a weaker US dollar, which makes gold more attractive for non-USD holders. In several countries like India, gold has also hit fresh local record levels, like 112,419 rupees per 10 grams on the MCX. Why the rally? Key drivers. Let's dig into why gold is rallying so strongly. Expectations of U.S. rate cuts. The Federal Reserve made its first rate cut since December recently, and markets believe more are coming later this year. Lower rates reduce opportunity cost of holding gold, since gold doesn't pay interest. Safe haven demand. With inflation still a risk, global economic uncertainty, and geopolitical tensions, Ukraine, trade, etc., many investors are moving into gold as a hedge. Weakness in the US dollar. As the dollar loses strength, gold becomes cheaper in other currencies, pushing demand. Strong institutional demand. ETF inflows, central bank purchases, and investor interest remain high. This amplifies upward pressure. And 5. Technical breakout. Gold has broken through previous resistance zones, which triggers momentum trading. When that happens, more buyers jump in, which pushes price further. Experts note that resistance is being tested now. What experts are warning or potential risks? Even though the trend looks strong, analysts are also pointing out cautionary flags. Overextension. Some say gold's recent rise has been rapid, and markets may need time to digest gains or correct downward. For example, resistance levels now are very important. If gold cannot sustain above new highs, there could be a pullback. Fed may surprise. If upcoming data, inflation, jobs, etc., is stronger than expected, the Fed might delay further rate cuts or even tighten again, which would likely pressure gold. Strength in non-gold assets. In some economies, equities, bonds, or other commodities might look more attractive if inflation comes under control or growth expectations improve. That could divert investment away from gold. And currency volatility. Though a weak dollar helps, sudden dollar strength or FX risk could hurt gold prices. Geopolitical or global supply chain shocks, these work both ways, sometimes pushing gold up, safe haven, but also creating uncertainty that might prompt selling if investors need liquidity. What's next? Scenarios to watch. So, what might happen in the near term? Here are 3 possible scenarios. Scenario A, bullish breakout. If upcoming data, e.g. U.S. inflation, Fed speeches, are dovish or confirm expectations of rate cuts, gold could push above current highs, maybe towards US dollar 3,800 to 3,900 US dollars per ounce in this run. Momentum could carry prices upward. Scenario B, pullback or consolidation. If data surprises on the hawkish side, or if investors take profits, gold may pull back to support zones, possibly around 3,600 to 3,700 US dollars per ounce. We could see sideways trading with dips. Scenario C, range sideways movements. Without major surprises, gold might trade in a band around 3,700 to 3,800 US dollars per ounce with volatility, but no strong directional move until one of the big data points, Fed comment, inflation, etc., gives clearer guidance. To sum up, gold is up near or at record highs today, pushed by rate cut expectations, geopolitical risk, safe haven demand, and a weakening dollar. The trend is bullish, but we are in fragile territory. Resistance, potential for profit taking, and mixed upcoming data could cause swings. What happens next depends heavily on what the Federal Reserve says, U.S. inflation data, and how global investors perceive risk. If you found this useful, please like this video, share it with anyone interested in gold or commodities, and subscribe so you don't miss the next update. Disclaimer: this video is for informational and educational purposes only. It is not financial or investment advice. Always do your own research, consult with a qualified financial advisor, and consider your personal financial situation before making any investment or trading decisions. Past performance is not indicative of future results.